In this lesson, we're going to go into risk management with technical analysis and getting a strategy put together on how to protect your capital, when you should get out of trades. And this is going to be a major part in your trading strategy, because winning is one thing, but can you protect from losing it is a whole nother thing, and very important that you do. Technical analysis is an essential tool for traders, but it should not be the only factor in your trading decision. It's important to integrate technical analysis into your overall trading plan and risk management strategy. Always use stop loss orders and position sizing techniques to manage your risk. Consider using multiple technical indicators and chart patterns to confirm your trades and minimize false signals, like we've been talking about. Keep in mind that technical analysis is not a guarantee of future market movements, and always be prepared to adapt to changing market conditions. That is huge. That is a big tip. Write that down. Always be prepared to adapt to changing market conditions. So if you have a setup, you're looking for that setup, and then it does not form, price invalidates it, and we're going the other way, you need to be ready to adapt and adjust and say, okay, that was wrong. If we're going to continue going up, where are my levels, this, that, where would I not want price to go, and adapt. And that's how you're going to be a strong trader, because you're not forcing your bias, but you have a bias. Does it play out? If it does, cool, let's get that trade. If it doesn't, I was wrong. Let's reassess the market. Where are we going? And then readjust there. Put your plan, all get the levels, price, take profit, stop loss, entry, all that, and get ready for that to play out. Does it play out? Cool, I'm in a trade. Does it not play out? I'm out, never got set up, whatever the case is. Adapt. And don't trade all day long. The markets are open all the time, but that doesn't mean you got to trade them all. I do New York session, the AM session specifically, right at open, a little bit before open, like 15 minutes, nothing crazy. And then I'll do the first like 2 hours, 2.5 hours of that market time. So 6:30 my time in Pacific to about 8:30. And that's it. I play those 2 hours. I get trades. If I get trades, cool. If I don't get trades and I still want to, or I have time to still be in the market, I'll come back after in the afternoon towards the last 1 or 2 hours of the market and find some trades there, because it usually likes to run at those times, and then I'll get back in there. So always be prepared to adapt to changing market conditions. Let's go on the charts real quick. I just want to show you a system that I use, and it'll make sense on how to do that. So let me turn off all these fair value gaps. Actually, no, you need them because it's gonna play into it. So let's go to the morning. So this blue area is the morning, okay? So fair value gap. I would have put stop loss under here. I don't want to see it go down. I have pivot points on here, which is something you guys could look into. Price swept it, went up, supported the pivot. So I'm like, okay, we're going to go up. This white line and these yellow are my VWAP with the extension on. I'm looking for price to come back into this area, specifically this yellow one, because it can, because we're selling, come here and go back down, although it went up a little stronger. So my initial trade is going to be at the bottom. Take profit here. 1.54 risk reward. Would have got out. My first TP would have been around 5, which is about right there. So we broke above. And that's my trade. Close some out at 5. Close it out at my take profit area. Now I could keep one on and let it run, but that is it. I'm out. I one, have a stop loss set up before I get in the trade, so I know where I do not want price to go. I know where I want to close position, so pretty much here is 5. So right up, once it broke right above this, I want to get out on some of my position. So now if it does go all the way back against me, risk is minimized. I got some profits. Then my main goal is the bottom of this VWAP extension. Got my second take profit. I'm done. You got to be content and happy with that. Price may run up forever and you could say, wow, what if? But it could have done this exact opposite, and then what if it completely went against you and you lost, right? So it's a constant battle. It's something I work on every day. Be okay with profits, have your plan, stick to your plan, and execute it. If your plan executes, great. Like that, you planned, it did it perfectly, you got boom, boom, money out. You got to feel great. Like that's what traders love, right? Execute your plan and it works. That's amazing. Of course, you'd be like, it ran up way up here. I could have put it here to the middle of the VWAP, the actual VWAP line. I could have done it to the top on the yellow where it hit up here for double the profits I would have had up here, but that's just a what if. What if you thought it was breaking above this, you kept holding and it went all the way down and took you out, right? What if? So have a plan. Let's go into a sell now. I like when price comes below, went up, came back below. No real setups for me down here. I could have gotten on these implied fair value gaps. A little technical. In the advanced course, this all makes sense. But basically it's fair value gap connecting two different wicks. I normally don't trade this time area, but we'll play right here. Fair value gap. We're above the VWAP and my EMA. Entry. Stop loss above, below these lows plus the VWAP's right there. So I want to be below that VWAP. Those indicators we talked about, that's all the VWAP is. It's just, we want to see what these indicators are called. VWAP, our EMA, which is this green one. Implied fair value gap, which is the wicks fair value gap. And the normal fair value gap, which once price goes through it, it deletes it off the chart. That's why you're not seeing all these marked up. And then pivots. So if you want your charts to look exactly like mine, pivots are general areas where price is running to. Doesn't always work to a T, but it's kind of just a guideline to help you with your bias. So back to risk management. That's mainly what we're doing. So stop loss down here. I want to see price run above this right here. So we got that. Okay. I shoot for 5 handles first. So that would be my take profit if this is too low. So boom, 5 handles. I would have been out. There's really nothing for me to gauge price to go to besides up here. So if we waited for this pivot point at 40.17, we never got there and it went against us. So I just have a hard rule of 5 handles. If there's really no other target to aim for, I'm just going to close out at 5 handles. Worked perfectly. Went up a little higher, sure. Got my 5 handles. Risk was met. Never met, sorry. And we won. Doesn't always work that way, but if you keep trading this way, your wins are going to outweigh your losses, and you're not going to be able to blow your accounts because you've profited so many times that loss is just taken away from your profits. You're not going negative in your account. Now, when you have a fresh account, maybe you drop a little bit below, but you work past that, and then eventually you just can't shake your wins out, and your account keeps growing even though you are taking losses here and there. So that is the proper risk management idea, you want everything planned out before you even get in the trade, and just know what you're looking for and what you're waiting for in price, so you could actually have a sound system and be a profitable trader. So let's wrap up this section and get your homework going, and then the next section is my favorite, but we'll talk about it when we get there. So let's wrap this section up.